I think that we're going to start to see changes late 2023 going into 2024. I think things are going to stabilize, and then I think you might even see like a little bit of a decrease.
Okay,
What's
so
on the docket?
Actually, something came up over the weekend that I kind of already made up my mind on. So this is with my own real estate portfolio. I made up my mind already on kind of like what I think I'm going to do, but I think it would be interesting to hear because other people might be in a similar situation, and because I'd want to get your take on it to see, because people might find that interesting. So essentially, to kind of set the stage, so I have a single family home rental that I bought for $252 in November of 2021. I had it rented out to a tenant for $1,600 a month and a variable rate mortgage on it. So as the rate was going up, my mortgage payment gone up kind of consistently. I went to the tenant and I'm like, hey, I know you mentioned when you moved in that you'd be potentially interested in buying the place. Would you be interested in buying it at like a certain number? Because it's a number that I worked out I knew would make sense for me with only owning it for 1 year, moving in and out, not having like realtor fees, etc. Yada, yada, yada. Now, she came back to me and said, you know what, Clark, like I don't want to buy the place. I don't want to own it, but here's my 30-day notice. I'm moving out. I actually don't want to be living in a house. I want to live in a condo. Like the house is too much work for me. I'm older. I'm single, like single woman, widowed. I want to be in a condo. I don't have to mow a lawn or shovel snow or whatever. So here's my 30-day notice. So now it brings me to, okay, the property at one point in time was valued at $450 appraised, but now that's peak of the market's already gone down by how much percentage. So I'm at the scenario now where do I A, sell the property, even given the fact that the market's come down a little bit, but it has overall gone up a lot since I bought it, or B, rent it out again for a higher amount to a new tenant. And this would be a kind of interesting scenario because there's probably other people listening that might be in a similar boat.
Yeah, I rent it out.
Okay, so walk me through kind of like how you would make that decision.
Like nothing crazy. I guess only because I think you win long term always with real estate.
The only reason why I would be looking to potentially sell it is because the capital might get me a better cash on cash return elsewhere, i.e. Coachwood Capital.
Yeah, I totally agree with that. I think that that house, if I remember correctly,
the blue one, it's like a 2-bed 1-bath.
Yeah,
house.
on L'Esperance.
On Megan.
Oh, okay.
Yeah.
So I think that if you really actually want, let me rephrase all this. What I should have, the right question.
You can think out loud here because people will be interested to find
what I should have asked for. So that would have been my response. Only because more than likely the cash on cash return that you're going to be getting at a $250,000 purchase price. Okay, now that I'm like walking this out on or talking out loud on this, I guess the issue is that you'll probably get a very aggressive cash on cash return at $250, given how much the rent is increasing, especially cycling out that tenant. But you're also, I feel, leaving a lot of cash on the table. So, because if you were to pull out equity on that property and cycle it into something else.
You mean pull out equity as in a sale or pull out equity in terms of like a home equity line of credit or something like that?
Yeah, like a second mortgage or whatever to get the equity out. Like, fuck. First of all, you probably wouldn't even be able to barely even do it at this point in time because the rates.
Yeah, like if I were to pull something out,
actually pull out,
you'd be pulling out at maximum maybe 50 to 70 grand at 7% interest rate.
Yeah, and then at that point, it's kind of like, well, what's that property really turning in terms of a cash on cash return now? So I think it really depends on the right question to ask first would be, what's your goals, right? Like, are you trying to make cash on cash return? Is that one of your biggest ones? Because if you're trying to make cash on cash return, that's the wrong answer, right? Are you trying to simply scale the number of doors that you have? Because really, if you're trying to do that, pulling out equity and scaling is the right answer, but your returns are going to be fucking brutal if you do that. And then not only that, but to scale a portfolio here at this point in time, arguably, if you're going after the the volume of doors and that's your goal, like that's a piss poor option locally here anyways, right? Because then it'll take you forever to get density, unit density. You can't really do it. You're basically a single family home one at a time. I've been doing that for 15 years and it's shit. Then the multifamily residences they're multifamilies that come up, you know, properties that come up locally here are fucking garbage. So I guess it really depends on like what you want. I mean, I'm not saying you can't do any of that. It's more difficult, right? So, I guess if it were me, given all of that, and if I wasn't doing this stuff in the States, maybe that's the kicker, right? Because the fact that we're doing this stuff in the States, it's almost kind of like a no-brainer. But if you take that equation out of the mix, where it's only what do you do locally, and don't consider that we're doing what we're doing with Coachwood Capital, what would I do? I would get another tenant in there. I'd push the rent as high as possible. You know, I guess within limits, because you know it's one thing to push rent as high as possible, but it's another thing to get people that are actually able to, you know, continue to pay that amount, right? Those are two different things, right? So I'd probably get rent as high as feasibly possible, and see if I could pull out any kind of equity. But I would keep it open. I would really try not to lock in. I'd even pay a little bit extra on the rate to not lock in. Only because I don't think rates are going to be this high.
That's what I have right now is open variable.
Yeah, and I would keep it that way, to be honest with you. I think that we're going to start to see changes late 2023 going into 2024. I think things are going to stabilize, and then I think you might even see like a little bit of a decrease. I don't think we're going to see crazy decreases, but I think it might land around 5, which is kind of where it should be. But that's what I would do.
Interesting.
Yeah.
Yeah. The
like really what I would do is I would, you know, put my money in Coachwood Capital.
Yeah.
That's really actually what that's what I'm doing.
Exactly.
Like I'm not like, no matter what it's so bad. Like no matter what I come across here, it never makes sense. It just never fucking makes sense. It really doesn't. It's a tough market right now. It really is. And the only stuff that makes sense for me locally now is to leverage the dirt that I have on other properties for ADUs and that new law that's coming out or has come out maybe, where you can put 3 residences or 3 doors on a property now, and there's no zoning issues with that. So those are the only things that made sense. And I kind of built my portfolio with properties that have the ability, so that I knew down the road I'd be able to do something like that when the market did shift, because I knew this was happening. So for the last 5 years, I focused on properties that have the ability to be able to leverage this, even the ADU. And then, you know, lo and behold, the 3-unit thing came up, right? So so I have a lot of properties that I can do that with. That's what I was focusing on. And I think I brought that up in another podcast where it was like, what kind of properties would I be buying now? The only type of shit that I'd be buying now is properties with some sort of intrinsic value that you could force additional value onto that property, because just buying rental properties now is just doesn't make sense. Yeah. Like comparatively speaking to other opportunities.